In this video, I'm going to explain to you how to use the Fibonacci tool, and I'm going to make sure that I make it so simple for you so that by the end of the video, you know how you can use your Fibonacci tool to trade any commodity that you trade. Now, I don't want to really waste time. Let's jump into the video. Now, the first thing you should understand that Fibonacci tool is not a magical tool. And where does it come from when it comes to trading? The truth is that every single trading, we are buying when the price is cheap and we are selling when the price is expensive. If you really want to make profits while trading, the fact is that you are supposed to buy when the price of whatever you are trading is cheap, and then you sell when it is expensive. So the main aim of this video is to show you how does the Fibonacci tool tell you that right now price is cheap and right now price is expensive. Now at the end of this video, if you understand that logic, I'll love you succeeded in telling you how exactly you are supposed to use the Fibonacci tool. But if you don't understand that main concept of how you can actually identify that price right now is cheap and right now price is expensive, then basically maybe I've not explained it properly, or you have not watched the video, or you have skipped some parts of the video. So when you get to the chart, this is my chart that is showing BTC USDT, and I want to show you everything step by step. Now on the chart, before I really bring out this Fibonacci tool, I want to first make you understand the concept of what really Fibonacci tool comes from, the concept of Fibonacci tool. Now the concept of Fibonacci tool, assuming that the least price that you had was 0 of that particular commodity, and then price grew up to what? Price grew up to 100. Now this is the concept. I need you to understand the whole concept, where it comes from. So if the initial price was 0 of that particular commodity and price really rose to 100. Now the question is, when price is at when this is the data that you have, this is the only data that you have, the question is, when is price expensive, when it is price cheap? Because you are supposed to buy when price is what? Is cheap, and you're supposed to sell when it is expensive. So what we are going to do, on this Fibonacci tool, we are going to divide the highest price here by 2. So when you divide 100 by 2, we get 50. So when we divide this price by 50, we are going to get the price 50 here. So at 50 here, we say that price is equal, like price is equilibrium. Price is not expensive, it is not cheap at 50 here. That is the main concept of Fibonacci tool, that at 50, price is not cheap, price is not expensive. But below 50 here, below 50, price is cheap, and above 50, price is expensive. That is the first concept that you should understand, that basically, Fibonacci tool is used in technical analysis, and what technical analysis is that you are using past data to predict what can happen in the future. So according to the past data that you have the lowest price as this and the highest price as this. So if this is the range that you are trading in, basically when price is at 50, it simply means that what? Price is at equilibrium, or it is not expensive, it is not cheap. But when price goes beyond 50, it means it is expensive, and when price goes below 50, it means it is cheap. Now the more it goes away from 50 above, the more expensive it is, and the more it goes away from 50 below, the more cheap it is. So it means we are going to be getting prices, we are going to be buying prices at discount. So when we see price around this zone, price is at discount. Here price is, yes, price is cheap, but price is not so much cheap. But here what happens is that price is at what? Price is at discount. So it means that price is really cheap, and you are given discount on that particular price that you can buy. Whereas when price is up here, price is really expensive. Price is expensive, and you are supposed to sell. If you bought here, you're supposed to sell up there. And if you're up there, you do not buy from here. And if you're trading on futures, or you're trading on a market that allows you to sell, you just try to sell when price is really up here. And many people do the opposite. But now let's jump into the chart and show you now how this concept is really placed onto the Fibonacci, and the Fibonacci levels, how they use that particular concept. So this is how you get the Fibonacci. You click there and you come here and you get the Fibonacci retracement tool, and this is how the tool looks like. So when price is going up, you draw the tool from down up to up like that. You go as where the price is going, and On this tool you have these different levels. You have 1, then you have 0 up there. So you have 1 up to 0. This is the whole range of the Fibonacci tool. Now on my Fibonacci tool, on also your Fibonacci tool, you might have different levels, but this is the most important level that I want you to really take care of. This is the level that I've already explained. This is the 0.5. Now if you see this price range is only ranging with 1, so when you divide 1 by 2, you are going to get 0.5. So this range that you are seeing is what we call equilibrium, is what we have just explained. Price is not expensive, it is not cheap. Any price can go anywhere. Price can go up or down. If buyers buy more, price is going to go up. If sellers sell more, price is going to come down. But right here, the price is like at equilibrium, and the buying price and the selling pressure, they are all the same. But as price tries to drop down here, coming into these regions, price is becoming now cheap. So always on your Fibonacci tool, I always look at the region 0.618 and 0.786. These regions are very, very important. Also on your Fibonacci tool, take those regions very important, because in this region here, in this zone here, we say price is at what? At discount. Price is now at discount. You are buying cheaply if you are really buying. Now the opposite is the same. If the price was coming down, the Fibonacci tool here will draw it from up and down. And let me draw it. We will draw the Fibonacci tool from up to down, and right over here where you are seeing right over here is when the price will do what? Price will really be expensive, and we enter sales from that side if price was coming from up and down, what is going. So what happens that when you get to the chart, what you are supposed to do is to see on your chart, and you see when it comes to the chart, you are supposed to see that on your chart, which range are you really trading in? That is the first thing. Now people don't know how to use the Fibonacci tool. Let me just show you how you can. Let me just get another chart and I show you how you can really use the Fibonacci tool. Let me get another chart on BitGate. Let me get another chart and show you how you can really use the Fibonacci tool. Now we have already explained the Fibonacci tool. Now I want to show you how you are going to use it on the chart. Now the first thing is to identify the longest stride that the price has taken, or the range that you are trading in. Now right now, as you can see on this Bitcoin chart weekly time frame, our price is around here. And what is the longest price? The longest range that we are trading in is between from that upper part, this is the highest, and this is the lowest. I think you can see that this is the highest, this is the lowest. So what you are going to do, you are going to drag your Fibonacci tool. It started from low here up to up there. So you are going to, and you are going to get the Fibonacci tool, drag it from the low side up to upper side there. And I told you this is how you draw it when it is bullish. I'm going to show you how you draw it when it is bearish. So after drawing this, the first thing that you are going to identify is the what? This 50% level. When you identify this 50% level, this is, we said this price is at equilibrium. When price is there, price can go at any other point. Price can go up or down depending on the pressure of buyers and sellers. Now that is the first point that you really want to mark. So you can bring out your trend line and you draw that this very point over here. So what is that? That is your 50% level according to this price range that you are dealing with, or this price range that you are dealing with. I told you that is equilibrium. And when you zoom in, immediately when you zoom in, obviously it is showing you that on this Bitcoin chart, the 50% level was really highly respected by the institutional traders, that when price knocked into the 50%, they just bought a lot that pushed price back up. All the institutional traders just bought from here. That's why you are seeing this long wick. Just after price dropping in here, price really went back up. Now after that is one thing, that's how you really use the Fibonacci tool. Now after identifying the equilibrium, now you know that below the equilibrium price is cheap and you're supposed to buy. Above the equilibrium price is expensive, you are supposed to sell. So for people who don't know how really this market works, people are going to be looking at to buy because they're seeing price is really up, so they need to buy. But if you're going to use the Fibonacci tool and you're using the concept of technical analysis, showing what price has already done to tell you what price is likely to do, you are telling you that from this range you are seeing that price is really expensive. Unless it breaks this zone, unless it breaks that zone, that's when you start saying that price is now so bullish. So for now, price is really what? price is at an expensive zone and you need to look for
Sales.
So after identifying that price is at expensive zone on the weekly time frame, you drop to either daily, but me, I use the 4-hour time frame. And this Fibonacci tool is not used with only, it is not used with only what? It's not used with only like solely itself alone. It is used with other technical methods that you are supposed to know. For example, when I drop on 4-hour time frame, for me, I'll look for market structure. Now you need to learn about market structure. You can check on my other videos of market structure, or you join, you check if there's a course down there that I'm working on. If the course is already out, or you want to join the wait list of the course, you jump down there, you get for your course. So on my market structure, the biggest range we are trading in, and it is already made a lower low right over here. You see, this was a low, but this is a lower low. So I'm going to drag my Fibonacci tool from up to down, and I show you how you can actually do it. So I'm going to grab this Fibonacci tool from here, and then I drag from up over here up to down here where it stopped. When I drag my Fibonacci tool, this is the longest range we are trading in. I think you can see that it is showing me price is what? Price is already at my what? At my zone, and price is consolidating in my zone. This is the equilibrium zone. This is the right. This is the equilibrium zone. Let me get this. This is the equilibrium zone, and already this is the 0.618. Now for me, for my favorite Fibonacci level is this 0.618. I like taking trades over there. So right over here, because price we saw on a weekly time frame, price was at an expensive zone, and we need to sell at expensive. So when price is at 0.618 right over here, obviously I'll be dropping into lower time frames, 1 hour and 15 minutes, to look for really shorts. So it means right over here, price is expensive and I'll be looking for shorts. That is how you can actually use the Fibonacci tool to take your own trades. Identify which one is price expensive, which one is price cheap. Are we in expensive zone? Are we in cheap zones? And which zones are we in? With what am I supposed to be looking for according to market structures and other technical analysis that you normally do? It is not supposed to be used alone, but if you apply Fibonacci tool properly into your trading, it can really help you to identify zones that you are really in and how you can actually look for your biases in those zones. If you have liked this tutorial, please make sure you subscribe to this channel and turn on the notification button. My name is Jibril, and I'm dedicated into really informing you about what you really need to do the right way. So what you should do is that subscribe to this channel, turn on the notification button, and join my Telegram channel. Also, comment in the comment section if you have learned something and if you want me to do for you something. If you have any question, put it in the comment section. And finally, what I really want to tell you is that you check in the description below. I'm really, this is the first time I'm working on a full course, putting everything together that has been helping you for the past 2 years. I want to really put them in a course. If the course is available, check the link in the description below. And if you want to be on the waiting list for the course, please tell me and I'll be able to add you where you're going to be waiting. I'll be the first person to get my course. Thank you so much for watching. Let me